So Kipling is a handbag and luggage brand that has quite a unique positioning as a casual lifestyle brand. The brand has been founded in Antwerp over 30 years ago. In 2004, it was acquired by VF. VF is a major US lifestyle group that actually has brands such as Vans, the North Face, Timberland, and also recently acquired Supreme. Today it's a true global brand. We do nearly a third of our revenue in each one of the continents. Our headquarters is in Antwerp, but we also have headquarters for APAC in Hong Kong and for the Americas in New York. But Kipling has always kept quite an autonomous management over the years, even if we use a lot all the VF platforms in terms of digital, in terms of sourcing and logistics.
We decided we would not manufacture ourselves for a couple of reasons. First reason is that it requires additional capital. So as we were limited with seed money in the beginning, it was not an advantage to us to invest into own production area. Secondly, I would say there had been a shift going on with more and more of these kind of industries shifting away from Europe and moving to the Far East because of better pricing. That meant that also some of the know-how of in these industries was already disappearing out of our European markets. It was very good we took that decision not to go in own production, because the growth that the company had, we would never been able to follow that growth if we had own production. If you want to increase sales by 35%, that means you also have to increase your production by 35%, but you cannot do this from one day to another. By the time you took a decision to buy a new factory or to build a new production line, it would probably take you a year. For us, it was just adding a new supplier onto the existing suppliers or increase the capacity with the existing supplier. So again, I think it was a very wise decision to focus on what we were good at. That means the marketing approach, the product development, the creative side of the business, and leaving the manufacturing and production up to some subcontractors. Initially in the early 80s, a lot of the production was done in countries as Japan or Hong Kong, but also there you saw new trends coming up where South Korea and Taiwan became two huge sourcing areas. In our case, we went to Taiwan. That seemed to be a very good direction, because as soon as we started the company in 1987, we were ready to take the market, and the product we had designed was very much appreciated from day one by our consumers. Obviously, Xavier had some industry contacts as well as the sourcing side, as well on the retailing side, and we hit the market with our new concept and new brand that was totally innovating, offering fresh and differently looking product, appealing to an unexplored market of young teenagers. In the initial days, we used some trading companies in order to help us, not only by having the introductions to the factories, but also by helping us in the whole process of order placing, product development, shipping, payments, logistics, quality control, and etc. So you really needed those people locally in order to be able to be successful. And definitely in our case, because we wanted to have a quality which was beyond which was the average in the market. We didn't want to compare to be cheap. We were a premium brand within our market segment, so the quality also had to be premium. Also, in these areas of the world, things are evolving. So not only after a few years, we had to remain in Taiwan. Also, their prices were going up, and in addition, there were the China borders were opening up for international business, especially in the area which is called the Shenzhen area, which is south of China and almost on the border with Hong Kong. The China government allowed the opening of new factories with the help of foreign investors. In our case, the Taiwanese supplier saw the opportunity of opening new factories in that area, where there was land available as much as you wanted. There was workforce available as much as you want, and at a cost which was way lower than the Taiwanese labor cost. So they opened new factories there, which allowed us a product cost saving from 15 to 20%. But the price was one thing. I mean, it was always, of course, interesting to have better pricing. But what was more interesting, that it allowed us tremendous production, new state-of-the-art new production facilities, which we probably would have got a problem finding in Taiwan at a reasonable price. And because we're a seasonal business, so everybody is looking for production capacity at the same moment. What happened in China was a quite unique thing. I think it's exceptional. Frankly speaking, I don't see it happening so quickly as in other parts of the world, because you got a unique combination of Taiwanese and Korean manufacturers that had not only the business and the know-how of how to manufacture, but they also had the money and the capital willing to invest. And then thirdly, which is not unimportant, they also had the order books. I mean, they had their customer base, which were providing them with orders. And then on the other hand, you had China with, as I already told, opportunities of buying land at virtually no cost, and a huge available workforce that was very eager to start working in these factories, coming from all over in mainland China and working in these factories. And I mean, that combination of know-how, money to invest, of customers that were waiting to give their orders, and the Chinese workforce is, I think, a quite unique situation that will not that quickly be repeated in other parts of the world.
So China has been the biggest platform for production of apparel and fashion industry for many, many years, but we've seen a lot of trends happening quite recently that made China actually less attractive and also less competitive compared to its neighbors. The first one is truly the rise of the middle class, and as such also the increase of wages, which didn't allow anymore to be China competitive versus its neighboring Vietnam or Thailand or Indonesia. So this has been a big impact that affected a lot of brands to look at production somewhere else. The second one is truly the trade deals going going around, very specifically the US-China trade deal issues or trade wars that affected a lot of apparel brands. Today, in terms of bag, if you want to produce in China, you need to pay a 15% import tax to go to the US. As such, many brands moved out of China, and one of the favorite locations there to change was happening in Cambodia and Vietnam, but also Bangladesh became very interesting. You also have trade deals going on with Europe, where there is some preferential treatments happening with the Everything But Arms trade deal. That also influenced in which location actually the production site would move. So with Kipling, we've been following this trend, and actually where China still remains very interesting in the production of products that are China for China, we have moved a lot of our production out towards Cambodia, as in order not to pay the import tax for the products going to the US. So I think one important characteristic is that in terms of producing product, the main priority was always is very much the price. But we see another element entering to it is the speed going to market. Today, the request also and development of fast fashion and following the trends requires a much shorter go-to-market. And if we look today at online channels such as Tmall, there is products that come onto the market within 6 months. And this is really something that also influences where we will actually produce, and that will also influence some production sites in the future for some brands.
The competition landscape has just become more intense, because there's more brands that develop bags now. On the other hand, I think the market has only been growing, and especially in Asia. I mean, we see two trends. First of all, there's a huge, that same segment of kind of younger generation looking for a branded product and a kind of affordable price range is exactly happening about 30 years later, but now in Asia. You see growing trend of shopping malls. You see trend of e-commerce that is booming. So that's one given trend. There is that generation now which is having more money to spend and is very much inspired by those Western brands than it was 25 years ago. Second thing is obviously, I mean, as I already said, the route to market. I mean, there's fast department stores, shopping malls, e-commerce that are available for them. And then in the case of Kipling, not to neglect is also that these people start to travel and go on holiday. So, I mean, they need luggage to travel with, or they need additional bags to travel with, which is definitely I mean, fitting our product category. Already for the last 10-15 years, people are moving to the direction of Thailand, Vietnam, also now Cambodia, as additional production sites. Again, history repeats himself. Again, their land and workforce is available. But as I pointed out just before, the availability of spare parts, raw materials, logistics, and etc. is definitely not up to the level of China. So the logistics parts of China should not be looked over. I mean, China did a great job, not only offering the land for the factories, but also building the roads and the connections to allow the transport quite smoothly, which is not the case in the countries I just have been talking about. And then again, distance, lead times, and etc. are not always facilitating things. So I think these countries will also develop and evolve over the next years to come. But for sure, the Asian market has become a huge market for any company, as well for sourcing, but now also for sales.
Another part which is extremely important, which is also very much consumer driven, and also the ethical behavior that brands need to have in terms of ethical responsibility and sustainability, is really choose partners that can answer these responsibilities. So VF has a very close look on ethical responsibility. As such, we would not choose a partner that is not responding to this. So we would choose a subcontractor, such as we have in Cambodia, where everything is solar LED, where there are solar LED panels for the production side, where we also follow the community, where there's a local school. And also it is something that we see as our responsibility, but also a consumer need, because consumer today ask for much more transparency to see where the products are coming from, where the materials are coming from, how they are actually followed up in the future, and also how they are recycled. So to summarize, the big key is really from price to speed and sustainability. Another point, just also to answer the question on where is the future lying, there's different opportunities that are arising in the future. One big country or continent that we see coming up is Africa. We've seen a lot of Chinese investment into Africa that will also be considered as one opportunity of production for the future.